Okay, well, with that, I'm going to kick it off here. First of all, thank you everyone for your time and for attending today's session. And I would just like to introduce myself. I'm Hillary Pell. I've been with Avalara almost 5 years now. I've worked a lot with helping folks automate sales tax over the years, and we and Limelight have partnered together to bring you this presentation today to talk about the options for sales tax automation when you're using Limelight. I have Laura Moses also on the line, who is my manager. If you want to introduce yourself real quick.
Hi, Laura Moses. I've been with Avalara almost 6 years, and we're thrilled that you guys have joined this. Limelight is a fantastic partner, and I think we're going to bring some interesting information to the table today.
And Logan.
Hey guys, Logan here. I've been with Limelight for 6 years now. I've moved kind of more into the technical side of things here. I'm no tax expert, so I'm glad we have Hillary and Laura on the line, and I'm going to be showing you basically the current state of sales tax profiles in Limelight.
Okay, so we've gone through the welcome and introductions. Just do a quick snapshot here of our agenda. I want to talk a little bit about the South Dakota versus Wayfair ruling. Some of you may have heard about it, some of you may know nothing about it, and basically talk about how economic nexus can potentially impact your business, and then take a look at the value of automation. Logan will speak to how those folks that are collecting sales tax now as part of their process have to maintain that in Limelight, and talk about the ease of use and automation with Avalara as an option instead of configuring those taxes in Limelight as your exposure could potentially grow. And then we'll just do a wrap up, talk about, in general, what we are seeing and what you need to start thinking about if any of this criteria is comes about when you're researching the overall topic about your tax exposure. And then we'll have a Q&A. Okay, so I don't know how many people follow court decisions typically, unless they're major. A lot of us probably don't. We in the sales tax business, this has been a long time coming. And to kind of set this up, states rely on sales tax revenue. So over the years, in the past, let's say 20 years, we could just take a snapshot, even more so in the last 10 years, the way that we consume products and the way that we shop and the way that we basically interact now has changed so much from going out to a store and buying something that you want. Now we're going online and we're seeking out. So over the years, if you think about that, the sales tax that used to get rung up at the local store that you pay on a TV, on, a vitamin kit, trying to just get an idea. I know a lot of you folks are in the supplement business. Any type of skincare you would pay at the time. Now, over the years, since physical presence has become less of a part of our shopping and consuming experience, the states have lost billions, literally, in that time because of the fact that the ruling that South Dakota versus Wayfair overturned was that you had to have a physical presence, a salesperson, a warehouse, or some type of physical footprint in a state to be liable to collect sales tax and charge your customers and remit. So I wanted to focus on this for those that don't know anything about the history. It is revolutionary in the sense that normally you would not even be subject to needing to collect sales tax on your sales to customers because you didn't have a physical presence. What Economic Nexus and South Dakota versus Wayfair did is it reversed a ruling where you didn't have to collect sales tax if you didn't have a physical presence, or as we will call Nexus. Nexus, we use a lot in our industry, but basically what it is whether or not you are liable as a business to be collecting and remitting sales tax because of a physical presence. This has basically made physical presence not the only test as to whether or not you should be registered and collecting sales tax. And the ruling was South Dakota versus Wayfair. And basically, this ruling granted the authority to impose sales tax obligations on out-of-state transactions based on the dollar amount. In simplest terms, how much you're selling into each state now is going to be subject to analysis to see if you should be collecting sales tax. And it changes the scope of your business in the sense that you now have to be performing this administrative task that you may never had to have performed before because you're meeting the thresholds in those particular states, which are basically based on sales revenue and or transactions. So for South Dakota specifically, they decided that anybody that is selling product in excess of $100,000 or 200 transactions into South Dakota are required to come forward and register and collect sales tax in that state. So as I said before, the most impactful part of the ruling is that the physical presence has been overturned. You no longer need to have a physical presence somewhere to be liable for sales tax. So just to review, economic nexus as it stands is a tax collection obligation imposed on sellers based on the level of economic activity within a state. And like I said, unlike physical presence, it's based entirely on the dollars. And like most sales tax laws prior, economic nexus laws can and are varying state to state. And again, it's basically just the outcome of the states needing to get back the revenue that they've lost over the years because of the way that we sell and buy. Now, this is actually, I think, a great slide to kind of pull it all together, because literally just this morning, California has posted their legislation for economic nexus. So yesterday when we were doing this slide and you see all these updates, I don't have a blue in California. Well, just as of this morning, there's going to be a blue in California. So basically, as you can see, since this ruling in June, there are a number of states that have now started to set up their criteria for economic nexus. And per usual, each one is unique. I mean, some are similar in terms of transactions, and we will provide you with a link at the end. We actually have a whole site that you can go out and look at to start to analyze your particular situation against the ruling. But we have a matrix that we're keeping track of what those economic thresholds are. So as you can see, several states already have come on board. California came on board today. And the reason this is important is for some of you that are already collecting sales tax, you may be doing it in Limelight, you may be researching a state level rate, and you might just be figuring a blanket amount. But the reality is that when you start collecting sales tax, there's several other factors also. There's obviously whether or not you are liable or required to collect and remit. There's also product taxability. So let's just say you have a portfolio of 5 or 10 products. It could be that in some states those products are non-taxable because of what they are. You could also have exempt customers because of who they are. So there's a lot more that goes into being tax compliant than just loading a rate into a screen, which is what maybe a lot of you are doing now in Limelight. So taking a look at this, the calculation and the rate is just the tip of the iceberg. You have all these other factors that can impact that particular sale. And it really does get to that level. And for those of you that have exempt customers, and I know there are a handful that I've talked to, exemption certificates, that's basically where you prove why you're not charging a customer sales tax. So as a seller, when you're not charging a customer sales tax because of who they are, or if they're reselling, you have to have a certificate from that customer on file if you ever get audited. So just to give you some background there. So all these things go into it. It's not just a simple rate calculation that maybe some of you are doing right now as your business grows and gets more complex. And the big thing here, it's administrative overhead. Sales and use tax compliance is not a revenue generating activity. It is a necessary evil in the sense that it's a pass-through. You don't make any money on it, but if you're doing it wrong, you can get penalized for it. So this is where I'm going to bring Logan in, because as I said in the beginning, we've been partners with Limelight for several years, and we are here to help those folks that have these complex tax situations or growing businesses that will have them have another option other than what's in Limelight for tax configuration. And with that, I will turn it over to Logan.
Hey guys, so here what you're looking at might look familiar. This is the Limelight inherent sales tax profiles that you can configure. Coincidentally, I've actually used California as the example here with their recent changes. That is kind of convenient. So you'll notice on the left-hand side, this is just a simple sales tax profile that you would set up for California, sales tax of 7.25%. There's nothing defined in the county dropdown on the left-hand side. And then you specify to address tax to shipping and apply tax to the shipping charge itself. So the screenshot on the right is to illustrate after these recent regulation changes, the level of complexity involved has kind of rendered this tax profile not useful to a lot of clients that are operating in certain states. And soon enough, I would think that, you know, as more states come on board with economic nexus, you probably won't be able to use these profiles at all in the near future. So on the right-hand side, I'm showing you the county dropdown of California. You'll notice that there's quite a few counties within California, and they all have their own local sales tax rates as well. My understanding, and Hillary, Laura, you can correct me if I'm wrong, but the county or state sales tax rate can change quite a bit over time, and you're having to input these values manually. So I had to type in 7.25. I did a quick Google search on California's tax rate, and of course that might change in the future, and you'd have to keep that maintained in the profile. Now with Economic Nexus, well, actually previously, prior to Economic Nexus, a simple California profile like you see on the left would be sufficient if that's where you're operating your business out of. If maybe you have a larger operation where you're operating out of many states, you would only need one profile per state. So it used to be fairly easy to manage within Limelight sales tax profiles. With the recent changes with Economic Nexus and you having to charge sales tax out of the states that your customers are purchasing through, it basically renders these profiles no longer useful. So that's what I'm trying to illustrate here. And with Avalara, all of that is fully automated in real time in the background. So any of these sales tax rate changes and the complexity of charging sales tax at the county level is handled completely in the background. And you know, any changes to those rates, any customer or product exemptions, those are all factored in real time as well. So basically, in Limelight, we have a direct integration with Avatax, Avalara's tax calculation services. This would allow for you to, in real time, as I mentioned, charge tax to your customers. I know of merchants that in the space are they're actually choosing not to charge sales tax, and they're actually putting a buffer to their product price. So if they're selling a $100 product, they'll, mark it up to 105, which obviously has room for error, and ultimately can result in, costing you money at the end of the year. And those merchants are basically at the end of the year dealing with an incredibly difficult task in hiring, a CPA to figure that out. And ultimately it ends up costing them a lot more than if they were to have used Avalara along the way. And I think, Hillary, you can kind of talk on some of the costs associated with, using Avalara versus, doing it this old school way.
Yes, and basically, as the slide points out, try to give you a picture of what exactly the connection looks like. Limelight and Avalara worked on an integration piece called a connector that allows you to connect to Avalara, and you're basically then bypassing the tax profile setup that Logan was just talking about. So by bypassing that, you're basically assigning and setting up your tax situation scenario in Avalara in the cloud. So for example, if you are in 2 states now, and because of economic nexus, you've determined that there's another 3 states. The way you would do it is you basically go into the Avalara dashboard and you check off those states that you're collecting in. Right then and there, when you start billing, it's going to know to go out to Avalara to calculate that tax. And that tax is going to be calculated based on a jurisdiction. So folks that aren't automated or doing it at the simplistic level, a lot of times use zip codes to try to determine the tax rate, which is wrong. It may get you close, but there's 11,000 taxing jurisdictions in the country. What that means is that there's several hundreds of zip codes that could possibly contain 3 or 4 different tax jurisdictions. And when you get into those states that have the locals, like Alabama, California, Illinois, Colorado, that's extremely important because they are locally administered and they want their tax. So for example, Logan's example where you would have to configure California, when you're using Avalara on those California transactions, it's going out and it's grabbing all those different taxes at the state, city, county, and district levels, and in other states that have locals. And it is calculating based on a tax jurisdiction assignment that we validate your address against. So it's literally rooftop. So the customer side, when the customer's signing on, when you're billing them, it's going to go through, and that customer, we're literally going to nail them down to a rooftop, longitude, latitude, and then we grab the rate, and then we send it back through. Now, when I talked about products and customers, in the Avalara system, that is also where you can set up any exempt customers, or if you have a large portfolio and some of your products are non-taxable, we allow you to map them with our product codes.
I think another benefit that we haven't mentioned here is that the generic Limelight sales tax profiles don't allow for you to present the sales tax amount to your customer prior to purchase. So they really don't know the true order total. But with Avalara, that calculation can happen on the checkout page in real time. So you can actually properly show the actual tax rate and order total that they're being charged. I know that there's a lot of concerns of abandonment in the industry, and I know personally, if I didn't know the exact amount of what I was buying at the time that I was buying it, I might reconsider. So having the proper tax amount and the proper order total during checkout, I think, is definitely a benefit as well.
Yes, for sure. And basically, from an IT standpoint, when you're looking at budgets and whatnot, Avalara is in the cloud, so it's not an on-premise solution. You don't have to worry about any kind of infrastructure. Connectivity is basically it, and several people using cloud systems now. It's easy to connect. Behind the scenes, like when I talked earlier about what goes on when you start using Avalara to calculate your tax, all that data is being written into basically a database that allows you to pull several different types of financial reporting. You can pull reporting based on items, on invoices, your monthly sales tax report, your sales tax returns report, and we probably have about 10 canned reports that you can run top line, bottom line, so that you can bring back all the detail that gets processed through that system. And if you are ever audited or you need to produce proof of sales tax rates and that you're charging them, you literally can pull a report in seconds. So it is also a reporting tool and analytics. I like to, it's almost a bit, I did some analytics work over the years, and it's a great business intelligence tool as well, because you literally can pull information about each and every transaction that you're doing in groups. Like if you want to find out, how much sales tax you charge yearly on this particular product, you can, view line item reports. There's several different configurations that are right there for you, and literally after a few clicks, you can bring that report up, versus now I would bet spreadsheets are a big part of that process. Same with the reconciliation. And like I said, you're able to use our reports to base your returns on that you're filing. And we also have a return service that as your business grows, if you are getting to the point where filing those returns is becoming cumbersome, we can do that for you as a service. We didn't go that much into that today. I wanted to get the core AvaTax piece covered, but we can actually do your returns for you and your new registrations as you start this journey. So, top performing organizations. We're in a competitive time, obviously. There's a lot of competition in every area, especially out online. 72% of successful businesses are more likely to leverage real-time updates to tax regulatory changes. And they're 3 times as likely to have automated workflows for tax preparation, filing, remittance, and recovery. Back to what I said a few minutes ago, somebody spending time doing this work in your organization is not revenue generating time. It's basically labor. And it's also subject to accuracy. If you're not automating and you're not dealing with a company that all we do all day, every day is track sales tax changes and laws and develop software around those changes so that you can produce compliant reports and be compliant. Now, I think at this point, I'm going to try to put a poll up, and I'm not sure if you can see it or not, if you can go in and actually fill out some of these questions, those that are on the line. It should allow you to get in there.
Yeah, so Hillary, I'm seeing it on my end, so I think it should be working, and I'm going to actually fill it out myself.
Okay, so our first question is, how much time does your company spend on sales tax returns each month? Number 2, how many states do you currently collect sales and use tax in? Number 3, does your company manage sales tax compliance in-house? Okay, I'll give it about 5 more seconds and then I'll end it. Okay, thank you for those that participated there. Okay, so now after we talked all about this, what should I do now? If you're a business in a position that either is used to doing sales tax or you've never done it ever, we like to kind of give you some guidelines here. Obviously, the outcome of this, if we're not already talking to you and you have any of these issues, we should start to engage right away on your potential fit for this type of product, because it is something that's not going away, and if your business is growing, it's definitely going to be an issue. But as we say, don't panic, because as you go through and review the data, you should begin to look at your sales dollars into the states that you're currently selling into. So we're kind of letting people know that that's one of the first steps you can do, is kind of take a snapshot of where you're selling and how much you're selling. And if that particular projection or current sales activity already has you at a particular threshold. You should definitely, if you have a CPA or accounting firm, let them know that you're doing that research. Let them know, because in the end, you have to decide for yourself as a business how you want to approach it. And as you begin to review this information, you're going to start making decisions on where you may need to register that you're not already registered, or if you're registered nowhere. You have to be registered to collect tax before you start to collect and remit. And in general, we can help you do registrations at Avalara. We have the service. You could do them yourself. It's completely up to you. So I just wanted to kind of have a general come together screen here, just to let you know what are the things you can be doing right now to find out when and if this is going to impact you.
So Hillary, it looks like Luis has a question about the onboarding process in terms of time, the process itself, best practices.
Okay, I didn't see that question. Okay, so
and I can touch on that in the Limelight application, because the configuration process is incredibly simple. So
okay, go ahead.
So in Limelight, where you're used to having to create all of those various different profiles, and obviously at this point it's not even feasible to do anymore, you would just simply set up an Avalara profile. You would tie that to the campaign that you're processing through, and then in real time, as orders are created, the tax calculation occurs on the fly. Now, if you want, you can, as I mentioned, integrate your checkout page to pull back the tax calculation so that you can present it to your customer pre-purchase. That does require a little bit more effort. It is fairly simple though. And that's pretty much it. And everything else, I think, would be on your side, Hillary, in terms of setting up the account and the Nexuses, et cetera. If you want to touch on that.
Yes. So in preparation, if you're not already collecting sales tax anywhere, like I said, the first thing that we're having folks do is take a look at your sales into each state. That's the first thing that you should do. Then figure out where it makes sense to register, or if you're not hitting thresholds yet, where you expect to hit thresholds. In terms of the implementation, as Logan explained, there's a configuration and a connector that's already established. So what you would do is you would work with our folks that will help you get connected to Avalara and give you the link to the connector to Limelight. And we basically will walk you through configuring Avalara for your specific situation. The most important thing that I want to insert here is, if you think that you're going to need to start collecting tax somewhere in March, the time to talk to us is not March. It's January, February. I say, yes, the actual physical setup of the system is very easy, but as many businesses are coming into this new position, you want to make sure that you are giving yourself enough time to research and set up the Avalara system correctly for your situation. Because while it is very quick and easy, you may have situations with products or customers that you might need to map. So, I mean, I would always, if you want to get up and running quickly, I always say, at a minimum, give yourself 30 days with regards to from when you would purchase the system to needing to use it, at an absolute minimum, because you want to be able to test. And a lot of you are doing a lot of high volume transactions, so we want to make sure that's working right. And that's, basically that gives us time to help you be able to start doing this correctly off the bat. So that's, it's up to you in terms of how you want to approach it as a project. And for some of you, it might not be that big of a project, and for others, it might be, a fairly complicated one. But once the setup is done, it's done. And then as you're using the system, let's just say you hit a threshold somewhere else, you get to the point where you'll go in, check that state off, and, we provide support. Obviously, we can help you do that. But part of the go live onboarding does include planning calls, mapping calls, and we want you to go live. We want you to be successful with setting up the system. So, we stay heavily engaged at that point. But in terms of a timeline, a lot of that has to do with where you're at in figuring out your exposure. And you should be talking to us already if there's even a question of this. Because we don't want to sell you something that you don't need. We are absolutely happy to talk to you about your situation and future state. But if this is even remotely an issue, you should be engaged already talking to us. And actually, I'm the person that you would be dealing with regards to that. So when we send out a copy of the webinar, you'll have my information. Just real quickly, we do have a lot of references online as well, content, and it's really good content. And we have a little quiz as well. You can go out to our website and take a Nexus quiz. We also have full-blown Nexus studies. So the Nexus quiz is kind of, a do-it-yourself kind of thing, and Nexus studies are, if you're looking at some, possible costly situations around, you really have no idea, and that you could potentially have exposure in 50 states all of a sudden within 3 months, that kind of thing. We have actual Nexus studies that our tax advisors do here. But for most people that are already in a few states and know a little bit about sales tax, the Find Your Nexus tool has been beneficial. I've talked to a lot of people, gotten good feedback. And we also do registrations, like I said earlier. If you find out that you need to register in a couple states that you're not already registered in, we can do that for you.
Hillary, I see that another question's come in. Does this have any impact on service businesses?
Meaning someone that doesn't ship a physical good.
Right.
Well, what that comes down to is if your service is taxable. If your service is considered taxable, and that's something that is usually determined at the state, level. That's kind of a taxability issue more than it is a Nexus issue.
Right.
But what will matter with regards to services is when you go look at that matrix on the website, a lot of the economic nexus is triggered purely by sales dollars. So they don't even necessarily care if that sale is exempt. If you're selling X amount into a state, even products and services that might not be taxable or to non-taxable customers, that still counts as gross revenue. And there's a few states, I think, that specify taxable dollars only, but I believe most of them are gross revenue, and that's where you have to look state by state. But so that's twofold. Your service dollars will go into a total that will trigger if you're, impacted and should be registered by the threshold. But whether or not the service that you're providing is taxable, that's taxability side research. And you can, we can help you with that. If you have any questions around that, you get in touch with us. It's also something that, you can speak with someone in your accounting department. That's where you need to determine that if in fact that service is maybe taxable or non-taxable based on where you're performing it or where somebody's purchasing it. Does that make sense?
Thank you, Hillary.
Yeah, and Hillary, I know we don't have really enough time to go too deep into this topic, but I know that there is a tax applied to those that have affiliate networks and have, I guess there's a click-through tax that if you're selling a service, they might still be subjected to. But I don't think we have time to really dig too deep into that. Just another,
we do have information on click-through Nexus on our website, though, and
okay.
we plan that for a future topic. Okay, any other questions out there? Okay. And again, you'll have all of our emails, so if you have any questions, feel free to shoot an email, give us a call. I just wanted to wrap up here. So just to give you an idea, a comfort level, over 20,000 customers are using Avalara to get tax compliance right. We have over 20,000 customers, which is pretty amazing because we started as a startup and the market for small and medium business was untapped, and this is how far we've come. So it gives you an idea of how important that this subject is and the cost of doing business. And our value proposition is accuracy, efficiency, and pre-integration. Some of the most costly things are in there. Our system is easily integrated. You're not having to build your own tax system. Limelight and in general, ERP, OMS systems, e-commerce systems, none of these systems want to maintain a complicated tax engine. They need to keep the systems working for why you have the systems, to do the things that you need them to do. There's not going to be a movement on the part of any accounting software to try to do this better than we do. And the efficiency part as well. So your value basically comes back to an accuracy, avoiding penalty, efficiency. You're not having to hire somebody now to do this full time when they could be working on something else, and the integrations, which, both the fact that the integration's pre-built and that we are in the cloud take away a lot of the headaches around the cost of infrastructure and whether or not, there's going to be a big integration fee or a big, project around connecting the two systems. They're already pre-built. So that's all I have. I thank you for attending.
There's another, hey Hillary, there's another question
Oh, no.
from Stan. He said, where can we see the technical details documentation on how this can be integrated with the checkout page and what is the process?
Yeah, so Stan, I can help you with that directly after the webinar. We can coordinate with Hillary and walk you through that as well. Hillary, that would be that would basically just be your API documentation, and I think we have that on file, but I want to make sure that we have the most up-to-date version that we share. So
yes, yes. Okay, so if there's any other questions, if you can get them in now, I thank you for your time. I'll give it another minute or so if anything comes up. And again, you have our contact information. And this will be the first of probably many webinars that we're going to do. Next year, we were going to take a look at that click-through Nexus, because I know that's another topic that impacts your customers. And I know you have some expertise as well. So we look forward to maybe that being, a follow-up to this sometime in first quarter. Okay, I'm going to sign off now then. Thank you, everybody, for your time. Have a great day.
thank you, everyone. Thanks, Hillary.